Well, greetings and salutations, Series 7 test takers. This is the Series 7 guru coming to you from my studio here in fabulous Las Vegas with an explication request. Kudos to our test taking weekend warriors. The best free supplement to your paid study materials is my YouTube channel. But if you don't have a Kaplan QBank, I highly recommend it. We'll help you with any question from any vendor. But if it's a Kaplan QBank question, you can just send me like this test taker did the QID, and I can bring it up backstage. If you don't have a Kaplan QBank, I recommend it as a paid supplement. With my Guru 10 discount code at checkout, you can get it for about $60. I also recommend the Quick Sheets as about $20. And for that commercial, Kaplan allows me to give you free look on their content. All right, so this is QID 1359989. QAD, a corporation whose common stock is currently trading at 90, is having a rights offering. So, one of the rights you have as a shareholder in QED or any corporation is your preemptive right, your right to maintain proportionate ownership. What it amounts to is your first right of refusal on the issuance of new shares. And typically, that's the most likely candidates to provide QED with the financing is the existing shareholders. So before we go get some new shareholders, go to our existing shareholders and say, hey, listen, would you like to maintain your proportion ownership? And if we can get the money from our existing shareholders, we typically going to save some money because we're not going to have to hire an investment banker to distribute those shares. And the mechanism for doing this is called a rights offering. So, as your broker, I call you and I say, hey, QED is doing a rights offering. Now, during the initial stages of the rights offering, by the way, this is more of a test prep vendor question I'm about to explicate, but you certainly need to know the rights are short-term and at issuance exercisable below the current market price. And you've got to be able to contrast that with warrants, which are long-term and exercisable above at issuance the current market price. So we shouldn't be surprised here that we're going to be able to subscribe at less than the current market price as an existing shareholder to give us that right. Now, we can't maintain proportional ownership. We can't demand that you invest, but we can ask you politely, right? And I think a good way to remember what can happen to a right, a warrant, or an option, it can be traded, it can be exercised, or it can expire. All right, so the terms of the offering are 7 rights plus $83 to subscribe. So if you're an existing shareholder in QED and you want to subscribe, you'd send your rights. For every share you have a right. And so if you had 700 shares, you'd have 700 rights. It takes 7 rights to get an additional share, so you'd be able to buy 100 more shares. You'd send 100, your rights, 100 times 83, $8,300 into the rights transfer agent, and you will have maintained your proportion ownership. Now, you don't have to do that, but if you don't, you're going to be diluted because they're going to shove those shares elsewhere. Now, at some point, the rights offering no longer requires you to own the shares, and that means the rights will be trading X. And so you say, well, Dean, I'm not so sure I want to subscribe to the rights offering. Can I trade those rights to someone else? I can. I say, yes, you can when they're trading X. X is Latin for without. So here it says the terms of the offering is 7 rights to subscribe. Compute the theoretical value of the right on the X rights day. That means we no longer need to own the stock to participate in the rights offering. Now, they're going to be more valuable at that point because you're not going to have to come up with the money to buy the stock to participate. So if this was cum rights, it'd be +1. All right. And again, calculating this is more of a test prep vendor stuff, but the current market price here is 90, and we're going to be able to subscribe at 83. And so in theory, that's worth $7 to be able to buy the stock at 83 when the stock is 90. In theory, because in practice, something is only worth what someone else is willing to pay. Now, remember, it takes 7 rights to get this done. So that's the number of rights needed. And so we do have that, and we find out that each of these rights are theoretically worth $1. Now, if you were an existing shareholder and now these rights are X, as your broker, we would expect in the secondary market for these to be trading at something a little bit above $1, because remember, even though it's short term, there would be some time value. So the answer to this question, the theoretical value of this right is $1. Let's put that in there as our answer. And remember, inch by inch, your Series 7 is a cinch, and yard by yard, your Series 7 is hard. If you have any other explication requests, you know where to find me, and hope you have a good weekend studying. Work hard, stay dedicated, disciplined, and organized through the weekend. Don't wear yourself out, and we'll talk to you on the next explication.